Welcome back to the deep dive.
It's great to be back.
All right, so today you've brought us a really interesting set of information. It's all focused on cryptocurrency, which, as we know, it's always changing, always evolving.
Yeah, definitely a lot happening.
And we're going to try to unpack some of those recent movements in the market, some big shifts in regulation, and maybe most importantly, that increasing interest we're seeing from major financial institutions, the big players getting involved. And the stuff you've given me today, it's mostly coming from a CNBC Crypto World video transcript.
Right.
So we got a snapshot of like crypto prices in real time, how the traditional markets are reacting to the crypto news, some important regulatory updates that are happening here in the US. And I think most interestingly, we have a really insightful conversation with the president of the Solana Foundation, and they talk a lot about institutional adoption.
Yeah, that's a really key theme that we're going to see running through a lot of this information. And our mission today, I think, is to look beyond those day-to-day, ups and downs and the noise.
Yeah.
And really try to figure out what are the core trends and insights? Like, what does this all really mean?
Right.
We want to understand, how could these market movements and these regulatory decisions actually shape the future, especially as crypto becomes more and more intertwined with, traditional finance.
Exactly.
Because it's becoming, more and more connected, obviously. And ultimately, I think we want to give our listeners like a much clearer picture, a more informed perspective on this whole space.
Yeah, cut through some of the noise and get to the meat of it all.
Absolutely.
Okay, so let's jump right in. And I think a good place to start is always with the markets. And one of the things that jumped out at me right away was that, even though we're seeing this broader downturn in the stock market, and it seems like that's being driven by, ongoing global trade tensions, and we've got, China's tariffs impacting the NASDAQ.
Right.
But even with all that going on, Bitcoin and Ether actually managed to show some slight gains. So specifically, looking at around midday Eastern time, Bitcoin was just under $83,000. That was up about 1%. Ether was just below $1,800. That was a very small increase. And then Solana's SOL token actually jumped nearly 4%.
Okay, so even in a down market, crypto was able to hold its own. So, that's interesting in itself. But, to make sure you're really understanding what's going on here, we need to look at crypto-focused stocks.
Right.
Because while those underlying asset prices were, like you said, ticking upwards, companies in the crypto space that are publicly traded, they were in the red.
Yeah.
So it's like you have this divergence rally. The Coinbase specifically, they had a pretty rough week, down over 8%.
Wow.
So I think what this suggests is that investing in the underlying technology itself and then investing in the companies, that are trying to build on top of it, those are different bets.
Right.
The stock prices might be more susceptible to overall market risk or, company-specific execution challenges.
Yeah.
Whereas, like, the assets themselves, they could be driven by totally different things like, adoption narratives or, like, broader macro factors.
Yeah.
So it's like two sides of the same coin, but they're moving in different directions.
It makes a lot of sense. Yeah. Yeah. It's almost like the infrastructure and the asset, they're being viewed kind of independently right now. But even though we saw those gains during the day, it's important to remember the bigger picture.
Absolutely.
Right? That weekly picture gives us a little bit more context. And for the week overall, Bitcoin was actually down about 1%. It was on pace for its fourth consecutive weekly loss. And then Ether was down even more, over 4%. It was looking at its second straight weekly loss. So this really just highlights the fact that the crypto market, it still is very volatile. You get these significant daily and weekly swings.
Exactly. And even as we're seeing more institutional interest and more adoption, like we were talking about, crypto still seems to be sensitive to what's happening in the broader economy.
Okay.
And it's got its own internal dynamics too.
Yeah.
The transcript mentioned that there weren't really any crypto-specific catalysts that day.
Right.
So when that happens, crypto can be more reactive to like movements in the stock market.
Oh, okay.
And that can like amplify the effects of things like these trade tensions that we were talking about.
Yeah. Yeah. So it's all connected in a way.
Right.
All right, well, let's shift gears a little bit and talk about the regulatory landscape because there's been some really interesting developments on that front. We saw that the Senate Banking Committee, they advanced a couple of key nominations, Paul Atkins, President Trump's pick for SEC chair, and Jonathan Gould for U.S. Comptroller of the Currency. And both of these individuals, they've been described as having what they call pro-crypto ties. And The vote on Atkins was actually quite decisive, 13-1. So these nominations, they're now heading to the full Senate for a vote.
Yeah, this is significant, I think, because it could be a sign that the regulatory approach towards digital assets is about to change. Atkins, during his testimony, he specifically said that establishing a regulatory foundation for digital assets, that would be like a top priority for him.
Hmm.
And he really emphasized working with the other commissioners and with Congress to make this happen.
Which is interesting because that sounds like a different tone compared to the regulation by enforcement strategy that we've seen from the current SEC chair, Gary Gensler. A lot of people in the industry have kind of, associated Gensler with that approach.
Right.
But it sounds like, if Atkins is confirmed, there's a chance we might see a more, collaborative, clearly defined regulatory framework.
Yeah, exactly. And a clearer framework obviously would give businesses operating in the crypto space more certainty, right? Which could then encourage more innovation, more investment. And the fact that he emphasized working with Congress, that's also really interesting.
Okay.
It seems like he wants to create legislative clarity rather than just relying on enforcement actions.
Okay. So, moving on. We also have some interesting news about Coinbase and those ongoing staking lawsuits. It looks like Illinois is planning to drop their lawsuit against the exchange. And if that happens, it would actually be the fourth state to do so.
Wow.
Vermont, Kentucky, and South Carolina have all dropped similar lawsuits recently.
So it seems like there's a trend here, right? Happening at the state level. And it really mirrors what happened earlier this year when the SEC dropped its own lawsuit against Coinbase back in February.
Right, and their initial argument was that Coinbase hadn't properly registered their staking program, right?
Right.
And I thought it was interesting. Coinbase's chief legal officer, Paul Graywall, he was very direct and said that all these cases, they just have no basis in law. So it seems like there's this growing feeling, both at the state and federal level, that these staking programs, maybe they don't fall under the existing securities regulations in the way they were initially being challenged.
Right. So this could be a really big deal for the future of staking, as a service that these crypto exchanges are offering. If regulatory bodies are starting to recognize that these programs don't fit into those traditional securities frameworks, that could lead to more clarity, less legal uncertainty for platforms that offer staking.
Definitely. So some good news potentially on the horizon for staking.
Yeah, it seems like it.
Okay, so now let's talk about some good news within the Bitcoin ecosystem. A report from Troll Venture Partners, they're indicating a pretty substantial surge in early-stage funding for Bitcoin startups, specifically pre-seed funding. These transactions, they've reportedly jumped by 50% in 2024. And I thought that was interesting considering that the broader tech funding environment has been a bit more cautious.
Right.
So why Bitcoin?
Well, I think it's noteworthy because it shows that there's like a renewed interest in building on top of the Bitcoin blockchain.
Okay.
Like entrepreneurs are still really excited about it. And the managing director at Camille, they attributed this to a couple of things. First, technical upgrades that are happening on the Bitcoin network.
Okay.
And then also just like a growing long-term confidence in Bitcoin's resilience.
Okay.
So it's like, yeah, the market might go up and down, but people fundamentally believe in the technology and its potential.
Gotcha.
Like they're thinking long-term.
Long-term.
Yeah.
And what's really interesting is the broader picture for crypto venture funding, it also looks really promising. Research firm PitchBook, they're projecting that overall crypto venture funding, it's going to hit over $18 billion this year.
Wow.
Which is almost double the average we saw back in the 2023-2024 cycle. And also anticipating more institutional engagement, from those big players like BlackRock, Goldman Sachs, and they think that that's going to really boost investor trust and lead to more capital flowing into the space.
Yeah, it's like a snowball effect, right? You have these big players coming in, and that attracts even more investment. It's really interesting. So we're seeing exciting stuff happening at that foundational level with Bitcoin. But then this momentum, it's also reflected in how these major players are looking at other blockchain ecosystems like Solana.
Right, which actually brings us to, I think, our main story today, that growing institutional adoption on Solana.
Right, exactly. And this whole thing about increased institutional investment, it really does seem to go hand in hand with the idea that traditional finance is embracing crypto.
Yeah, absolutely.
The more that these established firms get involved, the more it kind of validates the space and attracts even more capital.
Yeah.
And that fuels, more innovation and growth across the whole ecosystem.
For sure. Okay, well, let's